Welcome back to Lamb's Cryptoverse. Today I want to focus on two things. Number one, what's the after effect fallout of the FTX debacle and bankruptcy, of course. And the second thing I want to focus on and just let you know is that when I so-called teach you guys or talk to you guys about things, I purposely focus on one data researcher. And I do that so that I don't just show anecdotal charts where you don't know where they're from and then you have to come back to me. So what I'm trying to say is, and rather than giving you fish, I'm giving you the tools so that you can fish on your own. That's what's important. Of course, I'm not going to get a huge subscriber base by doing this because I'm giving away the crown jewels, right? I'm giving away all my secrets in a way, but I would rather you know in the long term, know how I do things and know how I think so that you can do it yourself, so that in the long term, this is going to build conviction. Because if you don't do the hard work, you don't do any work yourself, you're not going to have conviction. If you don't have conviction, you're not going to be able to buy crypto at a low price or stock, for example. You're not going to have that conviction to hold it when the narrative's changing and everyone's going, oh my God, there's rumors of a bankruptcy or there's something wrong with this company or the Coinbase is failing. Like, you're not going to know and have faith and conviction in Coinbase, for example, if I don't give you the tools or you don't have your own tools that you found yourself to research Coinbase and see if they have enough or high enough credit quality. So today, let's get started. I want to focus on just derivatives and how the FTX fallout has affected the derivatives market. So, like I said, I'm going to give you a tool, and the first tool is Arcane Research. They do great work on derivatives. There's other people that do great work, but they're amongst the best because they actually have a newsletter and they actually digest, not just show you the data, but digest and interpret the data for you in case you understand it, because derivatives data is pretty technical and difficult to understand. So let's get started. So this is fairly recent. This is December 6th, by the way. And they're talking about here how there's an issue with Genesis. And here they're saying they owe $1.8 billion to its creditors. I'm not sure if that's true. I think it's actually about maybe $0.75 billion because they owe money internally to DCG Group. So just keep that in mind. And also keep in mind that the Genesis liabilities keeps changing. It was near zero, then it changed up to, I think it was 375. So it's something like that. I think it's about $500 million, but it may not be 1.8 billion. So let's talk about what's going on in derivatives. The first chart I want to show you is, the first chart, figure 1. This is Bitcoin perpetuals. So these are perpetual options. I'm sorry, not options, futures. And this is where all the futures activity actually occurs. Investors like Perps rather than terms because you don't have the rollover risk with perpetuals. They don't expire. And what they're showing you is that not only the trading volume has declined, but open interest has declined. And that's a good thing. You want to see open interest declining if you're going to see any kind of bottom in Bitcoin. So that's what I want to focus on. The second thing I want to focus on is there has been a way of shorting Bitcoin by buying the ETF called BITI, but it ain't working. It's not working. And what they're showing you is that there's been a cumulative underperformance of 22% if you bought the BITI ETF versus the short. So it's not working. shorting you buying the BITI ETF does not work, and here's a cumulative short. So if you were right, you would be off by 22%. And that's the problem with these ETF, these exotic ETFs. They don't work. Let's go to the another thing. It's showing that leverage has been flushed out. So that's a good thing. We're seeing leverage go down in futures and options. And I saw, if you go to Crypto Quant, which is another tool, you can see that the total estimated leverage has finally come down from the highs. So this is a good thing. This is showing that there's extreme correlation in the crypto market. And it's true that anytime there's risk, you see extreme correlation from any market. The joke is that the correlations all lead to one, no matter what asset you buy. But what's still troubling me is that even though the performance of the small caps and large caps have been following BTC, I don't think they're down enough. I think the small cap performance, here it says minus 22, and the large cap performance is minus 21. It's almost equal. You should see, we're going to see a bear market bottom. You want to see the performance of small caps and shit coins and meme coins. You want to see their performance much worse than Bitcoin, and we're not seeing that yet. Oh, this is a good one. I want to focus you on volatility. The volatility of whether it's 7-day or 30-day, the Bitcoin and altcoin volatility has increased substantially to where they were in June, and actually may even going back to the COVID crisis of March 2020. That's a good short-term sign. And I want to focus on a few more things. We talked about Bitcoin perpetuals. Now we want to talk about the Bitcoin perpetual funding rate. When the funding rate goes down this sharply, that means that there's a lot of people shorting in the swaps market and options market. So that's a good sign. And here the right side, you can see the open interest, it's going down. And now we have what I told you earlier, the BTC options 25-day skew. And you can see here, I highlighted, the skews still suggest a high demand for downside protection. So when you see perpetual funding rates on the futures market turning negative, that means people are scared. And you're seeing the same thing here in the options market where people are scared. The skew is showing that there's a lot of people buying put options. So that's a good sign. And here the options volatility, implied volatility, jumped, again showing that investors are scared. So you're seeing some short-term bottoming in the Bitcoin market. And here, this is the funding rate for futures, and you can see it spiked down. And we haven't seen such a spike down since the COVID crisis of 2020. So again, this is a good sign. We're seeing a lot of good short-term signs that there's a bottom in Bitcoin, but this is only short-term. I think we covered almost everything. So now the last thing I want to show you is, let me make this larger for you, is you've heard of Bitcoin dominance, right? You want to see high Bitcoin dominance when we're at a bottom. And this one's just BTC dominance or Bitcoin dominance as a percentage of the total market cap. If you move to the right here, I like that they added this. They added stablecoin. So this is BTC or Bitcoin plus all the stablecoins combined. and this is the dominance. So you could see it hit 55%, so that's a good sign. And this occurred during the FTX bankruptcy, but now it's coming down again. It's amazing how quickly dominance is coming down. So this is telling me that the Bitcoin bottom, I think we hit $15,500 on Bitcoin or something like 16,000, that we've got short-term bottom in Bitcoin, but I'm not sure how long this is going to last, because we're already seeing the Bitcoin dominance coming down again and people going back into Ether. And by the way, this one here also combines ETH dominance. I'm not sure if I would use ETH in the same manner as stablecoin and Bitcoin, because ETH is an altcoin, but they do have it here. So I think that's everything. Yeah, I mean, they're showing the hash rate. The hash rate needs to come down more. So basically the story, I don't want to talk about the hash rate because the hash rate is really for Bitcoin mining. What I wanted to talk to you in this Arcane Research piece, and here, this is a cover of it, Arcane Ahead of the Curve. That's the name of it if you want to search on the website. So basically what I wanted to talk to you, the story was that the fallout from FTX is that there's been a lot more hedging activity, especially in put options and in futures where people are scared. And we know they're scared because the perpetual funding rate has reached a very low level. And we saw some other evidence that investors were scared because the Bitcoin dominance or the Bitcoin plus stablecoin dominance has been high. So that tells us that 15.5 Bitcoin bottom was indeed a good short-term bottom, and we can probably rally up to 17,000, 17,500 on Bitcoin. I'm not sure how long it's going to last, because remember, you can't just focus on Bitcoin, on derivatives when you're looking at bottoms. You need to focus on where Bitcoin has its biggest correlations. And I'm sorry to say its biggest correlation is with stocks. And I do not believe that the S&P 500 has reached the bottom yet. And anyway, if you look at the crypto greed, you know what? Let's go to crypto greed. I'm going to go to it so you can see what I'm talking about. You can get a live version of that. Fear Greed Index. This is from CNN. This is a crypto, not the crypto greed index, the CNN stock market fear greed index. And you can see it was at greed, and now it's at neutral with the stock market decline. But you can see it's come up a lot. So this is a greed area. So I find it hard, almost impossible for the crypto market to reach a bottom when the fear greed index is this high. So just be careful, folks. So I think it's a good area to start accumulating Bitcoin. But if you already have Bitcoin, you don't want to be buying too much when the stock market is so high. You want to buy Bitcoin and have your full bag of Bitcoin when the stock market is really low, and when this area here in the stock market is reaching extreme fear. And we're not at that level yet.